All right, guys, here we go. We're talking about stop losses today and why most of the time they do not work, okay? And there's two reasons. One, you put your stop loss, a mechanical one, let's say, meaning that you actually type it into your trading exchange where you make your, buy and sells. Type it in there, a certain dollar amount, and then the other type is that you just have a mental, stop loss. If it goes below this price, I'm out. Okay. And I'm going to tell you why those two scenarios, high percentage of time, do not work. Okay. And let's take, for example, here, the dollar. Okay. And well, that's where we're going to start it. And the reason being, this is a 1 hour chart. Every candle is a 1 hour price action. And as you can see, we were in this ascending wedge and we dropped out of it. Now, a lot of times you'll come back and retest that trend line that was previous support. You'll go back to the scene of the crime, and then it'll be resistance, of course, because you're coming up from the bottom, and then it'll roll over. Okay, so this is kind of what set up the trade over here, and then we'll take a quick look. And it's this bullish engulfing breakout clearing candle broke out. That's when we took a long position on Amazon. Okay, and I'm going to go ahead and clear it out here because we're coming up to that 0.618 fib. And whoa, see, I should have taken it right when I said it. Okay, I'm just going to go ahead and get out. That's not bad. Anyway, and okay, let's say the stop loss, I just, kept long in here. Of course, I just got out, so guess what? It's probably going to run up to, 120 or something right now. But anyway, let's say, which we did, we got in on this candle right here, and we're looking for continuation to the upside, a long position, okay? So again, there's two ways I could have put my stop loss in there, because nothing's guaranteed. Even though the dollar looks weaker here, as it's falling down, and this blue dash line is a long-term, multi-month, actually multi-year previous resistance zone, and then it became support for a while. Now we're back under it, so guess what? Yeah, it's resistance again. So anyway, let me see where we were, Amazon. So anyway, on this Amazon call here, we're just in and out, kind of a scalp day trade deal. Probably good things are melting down lower here. But anyway, let's say this was a daily chart. Matter of fact, let's just go to the daily, because that's what most people trade anyway. We'll put it right here. And like I said, there's two types that people are most used to, accustomed to as far as stop losses. One is typing in, let's say you got in, let's say this candle closed today at 116.14, okay? And you said you're not going to lose, more than the start to open today. So what was open? 114.38. So you put it at 114, okay? Because normally that's what people do. They put it at a whole round even number, okay? If your stock or crypto or whatever is at 120, just throwing that out there, you got in at 120, then a lot of times people will go, okay, well, I'll, make it for 115, and what you need to do, if it's 115, you're looking at getting out if it turns the wrong way. Then you need to put it at, instead of 115, maybe 114.80, or 114.73. Just kind of mix it up and keep it off, the radar, that whole round, even number, everything, being perfect right there, if that makes sense. And a high percentage of the time, if an asset, a stock, crypto, whatever, let's say gets over, let's say it's, under 25, it's 23, $24, and then it passes 25 and starts trading at 26, 27, high odds, high probability, they'll roll it up to $30, whole round even number. Okay, it'll go up to the next, or if it starts coming down and goes under, let's say $45, it's 44, 43, whatever, then they'll roll it to 40. Okay, so keep that in mind as well. Okay, so that's the first one that you type in. Make sure you don't land on that perfect whole round even number, 50, 67. Don't do that. Make it an off odd, random number. And then number two, people will go, okay, they'll have a mental stop and they'll go, okay, I'm not going to lose more than, $75, $50, $75, whatever. And what happens when you get close to, just say 75, okay? When you get close to 75, like around 70, which is where you probably really should get out, okay? So people get around that number and they go, well, we have this moving average right under it, so I'll let it run, instead of 75, I'll let it run to, 100. And then guess what? You're down 100. And then you go, well, just a little bit further down, we have this moving average again, or we have a fib line, or we have this previous support. So let it run to 120, and then next thing you know, you're $200, $300, $400 down. And then, you're very discouraged, mentally wiped out. And the only reason for it is that at that moment, and everyone's been weak in the moment, you didn't have the self-discipline to keep your word to yourself to get out at that dollar amount, okay? Whether it was $50, $75, and if it's 75, it really should be, $5 less than that, about, probably 70. And then, you let it roll up, and once you let it roll up to the next, whatever, 10, 15, $20, guess what? It's easier to let it roll up to the next, number, and just keep going. The next thing you know, if you told yourself you're going to be out, right in here, next thing you know, you're down in here, or down right here. And the further down you go, psychologically, the harder it is to sell at that bigger loss and get out. Okay, so it's very simple. Keep your dadgum word to yourself. If you say you're only going to lose, and quite honestly, I hate using that word, but that's, it is a loss. Okay, and your first loss is always your smallest loss. Okay, so get out. Okay, now that's the going with the dollar amount. Now another way of doing it is, if you're, do not lose more than one candle. Okay, what do I mean by that? Let's say that right up here, for whatever reason, you thought we'll just use this one. That you thought, hey, we've run, and that's what most people do. They wait till it gets way high, then they go, okay, let's get in. It has a big track record. But anyway, let's say you got in on this candle here. Let me take all this off. This candle here, this green candle here, and you thought that was going to keep, running up. And then guess what? The next day, you lost that candle, okay? It came down under that candle. This is where you should have gotten out, okay? Never lose more than one candle, okay? So there's two ways to do it. Number one, set a dollar amount. I will not lose more than, whatever, because everyone's risk, ability is different than others. Some people might be working with, 5,000, and some people might be working with, 20,000. Okay, so it makes a difference with your risk capital, how much you can have out there. So never lose more than one candle. Let's go to a 4-minute chart. Let's say you were day trading this thing, and okay, this candle here is a great example right here. It closed this red candle. First of all, it came up here, hit a flat 200, so that was high odds, high probability you're going to roll over, or that was going to be big resistance. So this was this candle right here was the first indication that, high odds, high probability, that's all you have is going to roll over. So you let this one form, and then this one, let's say you got in on this one or this one, okay? But let's say you waited till it got under the 20, got in here, and then guess what? The next candle closed right here. Well, and I've done this myself back in the day, and that's how I can relate to all this, because I've done it myself, okay? But right in here, you probably said to yourself, well, we still had the 200, look at all that resistance up there. We'll just let it run a little bit and then it'll roll back over. Okay, well, guess what? It didn't do that. It never does. Whatever you think it's going to do, when you start losing money, and it's like you're filling your tank with gas, and you know how fast that the dial spins, adding up the amount of money that you owe. Well, that's what it happens to when you start losing money. It seems like, whenever you're actually in the green and making money, it goes slow, and then when you're losing, it speeds up. But anyway, got in here. This candle closed what? Over the previous one. Okay, so get out, especially if you're going to go short here. Okay, obviously. So that's what you would do. Never lose more than one candle. Okay, because you don't know if it's going to. And the reason being is that whatever reasons, because if you can't name it, you shouldn't do it. Okay, if you can't name why, just like I did, as we were talking about this, why there was a potential short here. If you can't name it and describe what is happening and why you may want to get in, long or short, you shouldn't do it. Okay, you shouldn't get into that trade because you don't know enough about it. But anyway, for whatever logical, hard data reasons that you went short here, the market has now said all that's negated. None of that counts now. We're going to reverse this whole world and run this thing up, okay? And you can't fight it, no matter what your logic may be. This is previous resistance, so we're going to stop here and roll back over, or, whatever you can trick your mind into thinking in order to stay in that position. It never works out, okay? So just first loss, like I said, is always your smallest loss, okay? And just like here, let's say you go, I'll just do it I'm not going to do it. But anyway, let's say you're going to go long here because you think you're hitting this low pivot area. So let's say, you see right here, kind of consolidated here. Came in and hit it, kind of on a time count. So you're going to go long. And guess what? The next candle comes in is red down to the downside. Well, as soon as you take out the candle you got in on, thinking it was going to go up, that's where you should obviously get out of the play. Okay, just like if you had gotten in on this one and thinking you're going to go, on higher, maybe up to this 0.618 fib, you got it on this green one. Well, that was the next indication. Hey, this thing might be reversing, and then you were out here. Okay, there's no telling where this thing could go, especially if the dollar starts, gaining some steam here and moving to the upside. Now, this is just present day. Who knows what the scenario will be, a week from now or a year from now. But that's the main thing. Not financial advice or anything else. I would use only two primary types of stop losses. Both mental, meaning you're watching it, nothing's typed in for the market makers to see, and that is a specific dollar amount, and come hell or high water, stay with that dollar amount. Okay, if it's $75, start looking to get out of it. If you lost 70, and do not rationalize going to 80, because next thing you know, you'll be at 580 down. Okay, or the next one, don't lose more than one candle. I mean, how freaking simple is that? Okay, say you got in on this green candle here. Oh, we're going to bounce off to 20, and we're going to take this trend line out, so on and so forth. So you get in on the close of that candle. Next one comes in, boom, takes it out. Okay, Don't sit there and go, well, we're going to bounce off this bottom trend line. Okay. Yeah, I just know it. And then next thing you know, it's down here and you're several hundred, several thousand out of the money, out of, lost profit. And then by that time, you're so mentally wrecked, jacked up, I don't know how else to technically explain it. you know, you're just locked in. You're like a deer in the headlights. You don't know whether to, you're frozen. Okay, you freeze up. So if you have it written down before you get into a play, like if I was going to potentially go short the dollar before I even click the button to go short, two things. One, you got to name the position that you're in and why. You need at least two factors, two reasons, two hard data factors why you would even take that trade, either to the downside or upside. And then number two, get that dollar amount, or or do the candle method. Don't lose more than one if it takes it out. And then have that solidified, and then press the button, and then you're like a robot. Okay. All right, guys. Thanks so much, and we will see you on the charts.